So basically, what I'm what I want to take from what I want to do for this call is to answer any questions you guys have, any anything. Like we're not going to do, because of Thanksgiving, we're not going to do a Thursday call. We're not going to do our builders call. So it's really up to you guys. So what do you guys want from me? Any questions or anything? Anybody? Otherwise, it'll be a really short meeting. Yeah, CJ.
Alex. Okay. I know I've been barraging you with questions, IUL questions
Yeah.
on Slack, but I pretty much figured out what I need to do because between calling the home office and Columbia Life has a really good staff. They got 2 Jennifers and 1 Amanda. And I think I called them like 4 or 5 times this morning, and they helped me wrap my brain around the IUL, their IUL process, and how to, and the meaning of the illustrations and what I'm looking at, and so I pretty much figured that out. So I really, I feel bad about barraging with all those questions. Anyway.
No, that's all right. In fact, I had a really good time. I spent time with one of Bruce's guys, Amos, that had questions on it. And
but I like Columbia Life because, well, their staff is very good at answering my questions. They have a lot of good resources to help you understand the difference between Explorer Plus and Explorer Now. So because I have 2 clients that could use either one of those products. So I'm putting together a presentation. I was supposed to do a presentation this morning, but she couldn't do it because her car broke down and she has a Mercedes, and she was trying to locate a part in the area for less money than getting it from the factory, which is like $700.
Yeah.
So I was going to do a Zoom presentation. But we're going to actually do it tomorrow morning.
Okay. That's cool.
And then I was supposed to do another Zoom presentation this afternoon, but I couldn't get a hold of my client. So anyway. So I'm going to use the Columbia Life products.
The Columbus Life products.
Yeah, Columbus Life. You're right.
Columbus Life. Okay.
All right. Okay. Columbia. Okay. Potato. Yeah.
Yeah. Right. So, so in your words, explain the difference between the IUL Explorer Now versus Explorer Plus.
Oh, you want me to do that?
Yeah. Why don't you explain to us if you learned it? I'm running illustrations right now.
All right. Well, Columbus, the Now product, the Now IUL, it's an accelerated underwriting. In other words, it won't require a paramed. It's just expedited much more quickly than the
yeah. And so the underwriting is more simplified underwriting, right?
It's simplified underwriting. And actually the client on part 2 involving the medical questions, they actually answer those on their own. They get an email with part 2 questions, and they basically have 7 days to submit their answers.
Okay.
And then they sign off on it. Then they email them back.
Okay.
And then that completes the app.
Okay. We've had problems in the past with part 2. The part 2.
Oh, really? Okay.
Oh, dude, seriously. Like, okay, imagine, if you will. Okay. Rod Serling, right? Twilight Zone. Imagine, if you will, that email going into spam. And then it's been 2 weeks and you're wondering what the heck. So you call the client up, hey, did you get that part two application? What part two application? Well, Columbus Life should have sent you a part two application, and you're saying, well, maybe it went into spam. Okay, what should I look for? And you have no idea. Well, type in Columbus Life. Okay. And do you see what I'm saying? Like,
All right. Okay.
the hard
Got it.
part, that is a hard part. You can
Okay.
overcome it by making sure that the client is aware, and you need to make sure it gets sent and that they get it. So, and then you need to walk the client through it so that it sounds really all well and good, but it's another point of failure in the application process. All right.
All right. So that's kind of making me somewhat apprehensive. All right. So then maybe I should just go with the Plus product.
Well, yeah, maybe. Because I think the Plus still has the opportunity to get underwritten. I mean, simplified underwriting. But I'm going to show, let's see the difference. So I got Index
All
Explorer
right.
now.
Okay.
And what I was impressed with is there's a $25,000 minimum face value, where I think Explorer Plus
It's
100,000,
150K.
right? Yeah, see, there
One.
you go. So it's 100,000 minimum,
Right. Okay.
whereas now you can see that it's 25,000. So
Okay. All right.
I'm thinking that Index Explorer now is very similar to Index Mutual of Omaha's IULE, Index Universal Life Express product. There's probably a lot of similarities to both products. Now, let's just take a look and see kind of what are you giving up. So let's do an Index Explorer now. Let's do 100,000 just for grins, so we can like truly compare both products. And I got a cat in front of me on my fin. This is a visiting cat. Okay. It's my daughter's cat. Dude, seriously, move. God. Okay, so let's do 100,000. Let's solve for, let's just solve for, let's solve for premium. Let's solve for premium. Premium, let's do a simple illustration. This is not designed for cash value. $100,000 face amount. Let's just do simply monthly premium, PAT, and non-tobacco standard. Okay, and let's take a look at what that looks like. Okay, everything is all, let's just keep everything simple. Cash value at age 120, 10,000. Let's keep everything just default. Let's just take a look. And it's kind of interesting to see, to see which one. Now, I suspected the now version is more expensive per thousand than the Plus, but let's just, see what that is. All right. So here's the, you guys can see that still, right?
Yeah.
Okay.
Yes.
158.68. Let's take a look at the, okay. Excuse me. Sorry. No, excuse me. Okay, so the premium we see here is 158.68 premium, 100,000. That'll go, at this 6.21% interest rate. Oh my gosh. Man, dude, seriously. Okay, 100,000. So let's look at the cash value at oh shit. Come on, dude. I'm by myself, so oh, okay. Okay, let's just take a look. Cash value at age 80 or 70. So age 70. So can you write this down, CJ? The cash value is 30,827,
Okay,
and the premium is 158.68. And the
thirty
target,
thousand eight 158.68. Okay.
and
Uh,
the target premium is 27.65.
That's annual,
Yes.
annualized.
Yeah. Okay. Whoa, did my camera go offline?
No.
Yeah.
Oh,
Yeah,
it did.
it did.
And this cat. Okay. Okay. Can you take the honey? Can you take this cat off my damn table? Like seriously.
Come here, Finn.
Golly, thank you. Crap, man. Cat has
I
no.
thought you shut the camera because you didn't want us to see you beating up on the cat.
Oh yeah,
no
man. I had a
judgment.
knife. See, our cats, our two kitties that we own are much more respectful. My daughter's cat just doesn't give a crap. So, oh my God. Okay, so did you write that down?
Yeah. Yes,
Okay.
I did.
Okay, so let's change it to, see this is how simple it is to compare. Let's go to IULE plus 100,000, solve for premium. Input face amount is 100,000. And let's go monthly premium. And then keep everything else the same 6.21%. And then let's take a look at this illustration. Okay.
Wow. 130.
What was the other one?
Premium.
158?
It was 158.68.
Okay. So the price difference is due to it being simplified underwriting. So they got to do paramed exam typically. See, it used to be where, so I'm curious if Index Explorer Plus is 100% fully underwritten now that they have the Now product, which is not. Okay. So now you can see 130.89, 100,000. So let's go to target premium. So the target premium is 27.65. So does that target premium change from the other one, CJ?
It's the same. It's the same.
Same. Okay. Okay. That's what's interesting. It's the same. So let's look at the cash value. What?
870.
Okay. So 870. So we got 25,634. So which was the other one?
It was 30,827.
30,000?
Yep, 30K. Yeah,
Yeah.
30K. 827.
Yeah, which because they're putting more money in, it would stand to reason that it would probably be more cash value.
Yep.
Then what else we were looking at?
That was pretty much it. I
Yeah.
mean,
So how many dollars difference per month?
it's about 28.
$20 per month. You could still get paid the same because the target premium's the same, right?
Yeah, you get paid based on the target premium.
Okay. So the only difference is the risk. So what is the risk? The risk is the client going through a paramed exam.
Right.
Now, did they explain that part?
Yeah. It
they
was
say?
explained to me that they use 5 different factors that they pull from 5 different databases, information on the client, and if they pass all 5, then they will not require a paramed. If they have a question on one or more of them, then they may require a paramed.
That's on the Now
That's on the plus.
Plus. Okay. Okay. Got it. Now,
That's on the plus.
yeah. So notice the it's 25,000. So you can go below 100,000, which is the issue typically when you're dealing with so let's do another experiment. I love this. This is really good. I'm glad we're doing this. Okay, so let's run a now and let's compare it to GUL or IULE. Okay, so that's really kind of the competitor. So let's keep it at 25,000. And what do I have? The same 50-year-old. Okay. So let's just run a straight up illustration. Let's go monthly premium. Let's solve for premium. Face amount is 25,000. Okay. So let's take a look. Fun with IULs. I was running scenarios for one of Bruce's guys, Amos. And so, you know, kind of got my juices going on this. Okay, so we got
Oh, wow.
4291 for 25,000, 50-year-old male. Okay, is that right?
Yep.
25,000, 4291.
Mhm.
Okay, so sometimes we like to illustrate products like this or Mutual of Omaha compared to a whole life because the price per thousand is lower, a lot lower than whole life. And so let's just kind of explore that notion. So let's just start off comparing Mutual of Omaha's IULE, if I can get in. We'll see if I can get in. Anyway, okay, so they're paying $514.92 a month, 25,000. You know, by the time they're, I probably should have cut it off, but you know, it'll go to H120, right? So H120. And then the target premium that you would get paid on is $691.25. Okay. So for those of you that don't understand that, you're going to get paid the lesser of target premium or the actual premium. In this case, $514.92 a month is lower than the target. So you'll get paid on the $514.92. In some cases, in cases where they overfund their IUL for cash value, your max is the target premium. You'll get paid maybe a small percentage of anything over the target, but so all right, so we got that down. Let's take a look at
Hey, Alex, I did have a question that I've actually been thinking about for a while when it comes to IULs.
okay.
If somebody has a lump sum of cash to dump into an IUL without making it a MEC, does that mean that their premium is going to be a lot higher if they just dump that money in there since they're purchasing
No, it'll probably be
a
lower.
larger? You think so?
Yeah, it'd be lower. I mean, we can run that, but let's stay on the track first, okay?
Yep.
Are you guys seeing my screen still or what?
Yes.
Okay, so let's go to Mutual of Omaha. Illustrations and quoting. I know there's the easier website to use. No way. Oh, seriously? Oh my gosh. Let's do the mobile quoting. Okay, so we're talking Index Universal Life Express. All right, so let's go Ohio. What do you say, 50? It was a 50-year-old, right? 50 male. non-tobacco, and it was 25,000. Calculate. Okay, so Moo. By the way, gang, this is a really good IUL product. Is the Mutual of Omaha Index Universal Life Express? There's no underwriting on it, so I'm rather surprised that Moo's version of a IUL simplified issue is you know what, $5 cheaper, basically a little over $5 cheaper a month. Not that price is everything, because the ability to get underwritten. So I'll just tell you guys this up front. Columbus Life is a bear to work with when it comes to underwriting. We've had not so good experiences with underwriting. Some of you agents are like gun shy from writing any Columbus Life just because of your nightmare relative to underwriting. Okay, it just takes more. You gotta be able to tolerate more stuff with their underwriting. Okay, so that's why I'm surprised that the price is better for IULE. So, all things being equal, to do a simplified issue IUL, I'd go with the Index Universal Life Express, just based on price alone. And it's way easier to get underwritten. And from what I understand from, I think, Joy, they have a text application, a text signature now. Right, Joy? I think Joy told me that. Someone told me they have the ability to do text signature.
Yes, they do. Yes, they do.
Okay. So Mutual of Omaha was one of the worst because they required email signature. Now, according to Joy, they have text signatures. So I'd be all about it, Mutual of Omaha gang. I'd be all about Mutual of Omaha. Okay, so what's the other companion product that's similar to this product? And the next product is Forrester's. The Forrester's Financial Smart UL.
That's actually the one that I have, and I do think Forrester's is more expensive than Mutual of Omaha and Columbus Life. They'll buy a little bit marginally, but they're definitely more expensive.
Yeah, let's take a look. Age 50, gender male. Let's keep them in Alabama. And non-medical, solve for premium, and let's do 50,000 or 25,000, right? 25,000 minimum. Okay.
I personally like F&G the most so far.
Yeah, F&G does not have a companion product that's similar to this. This is actually a UL, so it's not Index Universal Life. So it's really not designed to grow cash value. It's a very different product.
Yep.
But it's still comparable because it's a UL that's simplified issue. So calculate quote. So we always like to go with Smart Solve. Smart Solve makes sure the policy goes age 120. So that's 50/45. By the way, never sell a UL or IUL at minimum. Never, ever, ever. Okay. You don't even have to understand the reason why. Okay. Just never, never. Target is 44.25. So that's, the other simplified issue UL that we have access to. We do have other ones in like Americo, but those are the ones that are, comparable. So I guess the winner is, drum roll, please, Mutual of Omaha. Okay. Now, Gabe, what was that question again?
I was asking because if somebody has a lump sum, let's say they have $20,000-$30,000 to dump into a policy that they have in their account. I guess as far as my understanding went, I thought that would buy a really high amount of life insurance or a death benefit, which means that the monthly premium would be expensive. I could be wrong. It's just I was trying to actually get information on that.
Okay. Well, it just kind of depends on how you want to illustrate it. Okay. So for example, in this case of a 50-year-old, 100,000 face amount, we can calculate, let's calculate, so let's just calculate premium based on 100,000 and then lump sum. Say put a lump sum of $1,000. Okay, let's just put 0. Let's just baseline it, right? Okay, so basically we're going to find out what is $100,000 IUL. Everything remains the same. 50-year-old standard non-tobacco on Index Explorer Plus. So let's take a look. Okay. Oh, we didn't. It was annual. Let's go with. I forgot what PAT stands for. It just means monthly. Okay. Let's take a look. Let's do this. Let's just gather some information. Okay, 100,000 death benefit. So 50, it's 130.89 premium per month. Starts off at 100,000, and let's take a look. Cash value at just find out age 90. Let's go 90. Age 90, cash value is 66,740, and the death benefit remains at 100,000. Okay. All right. So now that we know that, let's take a look at what if we dumped in under the same same basic. Let's dump in. Let's dump in. Oh my gosh. Our cats are not like this cat. Okay. So let's dump in 2,500. Let's make it more dramatic. Let's say they want to dump in 5,000. Typically, what you find some clients, they might have 5,000 another IUL, and we can replace that IUL with one of our IULs and 1035 exchange, like whatever cash value's in there, and can do for them better in the long run because maybe our products will pay a better interest rate. They have better bonusing on the interest rate. We can show them that they're going to get more for the value of their money to cancel that IUL and 1035 exchange the cash value from that product into our product. Okay. So, but let's just say this client had 5,000 extra to put in. So let's see what that effect is in doing a dump in of $5,000. Fun with the IULs. Okay, so let's take a look. Let's just go straight to the numbers. Okay, so the premium went down to $139 a month, right? Still start $100,000 death benefit. So let's look at age 90. What's the cash value at age 90?
So pretty much it's just taking down the monthly payments without going over the 7 year period.
Yeah. But notice that the cash value is higher. It's 68,110 at age 90. So it's a couple thousand more cash value. And then, same 100,000 death benefit. So, the 5,000 that they put in dropped their monthly. So notice, it's, 100. So the, 130. So this is actually a real savings, 130.89 per month times 12 times 40 years. So that amount is 62,827.20 compared to at age 90, the total premiums are 53,187.20. So what's the difference? Minus 53,1.
And the lump sum of much get the would have a bigger snowball to start from for the snowball effect of interest, right? So it'd accrue interest faster than just doing monthly.
Right. So it gains interest because you dump in money in the cash value. And so that's a $9,640 difference, as of age 90. I mean, it's much more dramatic because we're calculating at an older age. But for dumping in the 5,000, they get the benefit of saving, that premium. Plus, they've got another couple thousand more in cash value. So it's not a bad thing to do if they could do it. It's not a bad thing to do to roll in the money. So now you can do it like this. So there's another way to illustrate it. So let's take a look at, so in the same scenario, they dump in 5,000 and they want to, let's solve for face amount. And let's say they, 139 per month. So this is what that same scenario was, but we're going to figure out what is the additional face value if they dumped in $5,000, kept it at 139. Let's take a look at what the face value would be. All right, so let's take a look at that. The Columbus Life is fairly simple to illustrate.
It does look a lot easier than F&G's illustrations. That one I play around with a lot, and it's just what I'm trying to solve for always confuses me.
Wow, the death benefit. That's interesting. So it's basically 100,000. Oh, so what happened? Kept the face value the same. Age 90. $68,152. Yeah, $68,110. So that's interesting. So we kept it the same, but it didn't get them any more death benefit. Basically, we just kind of reverse engineered the same illustration. So what does that say? Actually, what that tells me is they've totally maximized the parameters of the product based on whether you decide to pay, you dump in, you pay that amount, then it's the same. So basically, we just re-illustrated the same exact scenario. So let me see, what would you do to just get more death benefit?
Question, is this a UL or an IUL right now?
This is IUL.
So wouldn't you have to put it to a type B?
Well, it's defaulted to option 1. So keeps the death benefit the same. So
Right.
basically let me see what I would do. I would solve for I want to solve for face amount. Let's do this and put all parameters. Um, 5,000. Yeah, it would always depend on how much they want to pay in premium. So 100 bucks a month will always yield about 100,000 in face value with a $5,000 dump in. If you want more death benefit, basically what you would do is you would, increase the premium, then it'll translate to a higher death benefit. So let's say they wanted to put $125 a month, solve for face amount with a 5,000 dump in. Let's take a look. I would expect the premium, the face value to go up.
I'm pretty sure. So since you have 100,000 as the face value, as the face amount already in there, if you change it to option 2, it should start off at 100,000. That 5,000 should already purchase you more off the bat.
Okay, so you got 119,000. The premium's 125 because we put in 125 with the 5,000 dump in. So basically you purchase yourself more face value than if you did option B, increasing benefit. I know a lot of you did no clue what I'm talking about because you're not really versed in IUL. So at an increasing death benefit, you've got the dump in. It is 125 bucks a month because we kept it at 125. Started out a lower death benefit, and then it looks like a lower target premium.
Yeah, so I would change the instead of solving for the face amount, I would put the face amount back to 100,000, how you had it. So it starts off at 100,000, then you do the dump in, and then it'll go up from there. I mean, that's
Well,
if
I
they
mean, yeah,
want
it'll
to.
go up from there because you start off at 100,000, right? I mean,
Yeah.
you're telling
So
it where to start.
I guess it depends what their goal is for the account.
Well, you got to pick one or the other, right? You got to either
Mm-hmm.
solve for face amount or solve for premium.
Right.
So if you want to solve for premium, option 2, increasing, starts off at 100.
So it's gonna
Then
be more
you want to know
expensive.
how much it's going to cost per month, right?
Yeah, probably like $200 a month.
Yeah, maybe. And really, the only way to really understand IUL is if you run, a bunch of different scenarios, because you can understand how each parameter affects the other when it comes to face value options. So in this case, it's 270 bucks a month, 270.11 monthly premium, starting off at 107,000, which makes sense because you increase the death benefit starting off at 100,000. Now you're solving for the premium amount. And so you see the death benefit increasing based on the growth of the cash value. So this is not a bad scenario for someone that's 50 years old.
Yeah, thank you for sharing.
So age 65, got 65,000. So anyway. All right, fun with IULs. Okay. Anyone else got any nerdy questions that we can? I know most of you are falling asleep. Gosh, I hate Teams. Teams always comes up.
Oh, that was very helpful.
That makes sense?
Yeah, it helped me decide which way I want to go. Yeah.
Okay, good. Awesome, man. And now I can't figure out how to get out of. Oh, there it is. It's in my other screen. All right, man. Anybody else got any questions? You know, if you start asking me IUL questions, I'll go all night and I'll illustrate like a madman.
So living benefits are comparable between on the IUL between Moo and Columbus.
I have no idea, dude.
Okay.
Why don't you call both of them tomorrow and let us know that?
Okay.
All right.
Okay.
And then post it on Slack.
Okay.
What we want to know is, does the amount of the accelerated benefit for chronic illness depend on the severity of the chronic and or critical illness? Like, is that a factor? Like the severity of the chronic and critical illness, a factor in determining how much the client has access to their death benefit?
Okay. I remember reading that somewhere. But I don't know which carrier, but that did ring a bell when we were talking about it earlier.
Yeah.
Okay.
So cool. Awesome.